Hey everyone, it's Mike Valtos from Orderflows, and today I want to talk about, this is a very quick video on the Delta Scalper and Unirenko charts. I get a lot of questions about the Delta Scalper, like what kind of charts work best with it, or can I use this chart, can I use that chart? But one of the questions I had recently was specifically about Unirenko charts, so I want to just shoot this quick video and show you how it looks with the Unirenko charts. First, brief disclaimer, this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or making any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's lifestyle or financial security. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So this is the results, or this is how the Delta Scalper performed with the default settings on various charts on Friday, August 25th. Okay, so again, this is only one day and it's at the default settings. Next week I'll probably not tweak the settings, but I know on which markets I can adjust the settings out a little bit. I said again, these are the default settings on various markets, and it will perform better, I think, on markets that are more, I'll say volatile, but have more price movements. Because, like, for example, here today in the crude, okay, really quick in the crude, it's not much, basically you've had, 40, you'll call it 45 low, 85 high, a 40 cent range, so you're not going to get many signals on markets that are basically moving sideways, not much movements, while in, for example, the Dow, the mini Dow, the YM today, this is, okay, now I have my Unirenko chart set at 472, okay, and these are the default settings for the Delta Scalper. But, you got, here, 722, you got to sell. Did it work out? A little bit, but what's your risk per trade? Okay, that's the important thing, right? Everyone always says, oh, you got to, have tight stops, or no, sorry, risk to reward ratio, 2 to 1, 3 to 1, 4 to 1, etc. But people sometimes don't understand really how that works. And what I'm going to show you, because they think that every trade they're going to take is going to be a winner. Well, if you got a risk to reward ratio of 4 to 1, even if you have 35% winners, you're still going to come ahead. But people like to be consistently reinforced with winning trades, even though they strive for a high risk reward ratio, but then when they start having say they got a 10 to 1 risk reward ratio and they have 5 losers in a row, they give up, which is stupid. But so like here, say you're getting short at 130, you have a stop up here at, I don't know, 410, 840, so maybe you got a 10 tick stop. Okay, so maybe you get a little bit, a winner here, I don't know, something out of it just goes sideways, because then you get the buy. You're getting long here at 832. Your stops down here, somewhere down in here around the zone, and again you get a nice move from what is that, 830 all the way up to 880 up in here before it starts going sideways, comes back down. Again, nothing in the Delta Scalper there. Gives you these little moves here that aren't happening, not much happening, and then the sell-off. So say you got 1 losing trade, 2 losing trades. We'll just call these losing trades here. Okay, 2 here. This one, honestly, to me, that's break even. So you had 2 losing trades of, I don't know, 10 ticks. But then, you got 30 to 80. You had one winner here of 50 ticks. So, you had 4 trades, 1 scratch, 2 losers, 1 winner. But your 1 winner more than makes up for all your losers. But sometimes people get lost in that. People like to be reinforced, right? They like to know that their method of trading produces a lot of winners, but they fail to take into account the risk to reward ratio oftentimes. Now, for example, E-mini S&Ps, okay, kind of quiet. I'll say quiet today, but is the 10-point range for the most part, roughly, just but was there signals early? No, but you had a nice buy here and a nice sell here. That's on the again, default settings, 711252, and on the Unirenko it's 472. These are all my charts, the same settings. Again, I'm not trying to what do you call it, optimize it or anything. I'm just showing you the same settings, different markets. NASDAQ. Okay, at least NASDAQ, you got some nice moves today here, the NASDAQ. Okay, so let's go back to around, 8:30 here. 8:30 is the cash open. That's when you get the most liquidity. I mean, yeah, there were some signals here that failed, but that's 4 in the morning, 5 in the morning. Really, NASDAQ and Dow. You're best trading that during the U.S. hours. So it struggles here. Loser, 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 loser. So what is that? Already 5 losers. Loser, loser, 5, 6, 7. Okay, then here, what do you got here? 58, 64. So you got, what was that? 6 losers, 6, 7 losers. And what are you risking per tick, per trade? Say you're getting short, I don't know, call it 64. Your stop's up here at 67. So you just had 7 losing trades. That's 3 points. Now you get a signal up here at 64, all right, to get short. What does it do? It sells off. 64 all the way down to, again, you're not getting any buy signals. Now whether you want to cover it here, anywhere in here is up to you, but again, it's still giving you the short signal. So say you covered at your next buy signal, it's down here, 58, what is that, 25-ish area. So 64 to 25, that's 39 points. So you just had 7 losing trades, okay, in a row, 7. But then you got a trade that's giving you 39 points. So 7 times, if you're risking 3 points a trade, you just lost 21 points, and you're thinking, shit, trading sucks, Delta Scalper sucks, fucking Mike, I'm going to come over there and stab you in the neck because I just had 7 losing trades. Well, okay, did you catch this trade? From 64 all the way down into the 20s. Down in here where you got your next buy signal. I mean, I don't know, maybe you covered it in here, maybe you covered it down here. You got another sell signal here, which also worked out. And then you got this buy signal, which also worked out. Again, you say you're buying it in here. Is there any reason to be getting out yet? No. So you got, you're buying it at 25. Your sell signal's up here at 35. So it's another 10 points. So, you got a winner of 39 plus another 10. That's 49 already. Now, I don't know if say you just broke even on this trade. Okay. So you're talking about 50 points. You lost 20 points, 21 points. You got back 49 points. That's what you are supposed to do as a trader, right? Minimize your losing trades, get out of your losing trades, and let your winners run. Euro currency. I don't remember how you did on the euro currency. Same settings. NASDAQ, it's you can see 472, 711252, 472, 71152. All these charts are the same. Okay, so early on in the session, fail. This is a small winner, maybe a small winner here, break even here. And then you get the nice move. I don't know what that is, 117, I don't know, call it 96, all the way up to 118.30 something. Then you have another failed trade. So you got, call it losing, loser, 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 and then boom, you get the nice winning trade. And then you're sort of stuck with again some losing trades in here. Again, maybe if you're trailing your stop, you could get something out of this trade here. Then again, losing trade, losing trade, losing trade. Then you get a nice winner here. I'll say a nice winner, but a decent one. 10 ticks, 10 full ticks. And then again, boom, another nice winning trade up here from, I don't know how many ticks that is. A losing trade, and then another nice winning trade. People sometimes they just give up on stuff, after a couple losers in a row. Again, another nice trade, 118.90 all the way up to 119.20. That's another 30 points right there. I mean, I don't know. I'm not adding it up right now. I'm just eyeballing it. 2 o'clock Friday afternoon, you should really stop trading the euro currency when the cash closes. But, I don't know if there's any decent moves here. Yeah, not really. You know, if you were to take the sum of all these after 2 o'clock, there's probably a small put you ahead a little bit. Now I'm going to show you the DAX, right? And the reason why you got to read the disclaimers because the DAX is a market that, wow, you get on a move, you're positioned correctly on a move, it's just, you could just fucking make bank. But you gotta get out when it's going against you. Okay, one of the reasons why I read the disclaimers because sometimes people see these DAX charts and dollar signs, or sorry, euro signs flash in their eyes. But look at this. Okay, you get a small move here. Okay, this one fails. Fail. Then you get a nice move here, 235 right off the low. Again, is there any reason to get out at this point? No, you got a buy signal, which again, say you got out somewhere in here, you get another buy here. So you're talking, from 135 all the way up to the sell. That's 30 points right there. This one fails, but then it comes right back with, that's up off the low. This one fails. Be nice to catch the rest of this move, but then you get another signal up here again from, I don't know what that is, 200 up to the 215 areas where you start getting some sell signals. You kind of go sideways, small wins, but then here you're getting short around the 210 area. It comes down in here, I don't know what that is, 195, before it starts rallying back up. This one fails, this one kind of fails. This is a nice little winner. This one, I don't know. It depends how good a trader you are. Probably would have just broken even or something. Maybe small loss. Same. It's broken even, small loss. A nice little trade here. Losing trade here. A nice winning trade here. Maybe something out of this. Break even. Maybe break even on this. A small winning trade there, followed by a loss. Get short here. Cover it here. This one fails. Get long here. Get short here. So you got a little something out here. But then again, you're getting short here around the 185, 86 area. And where's it trade down to? It trades down into the 70s. We're coming back up here. And a little buy here. Just struggles. Maybe break even. Where are you? There. Buy here, maybe break even. Then here, boom, nice move from the 170, I don't know what that is, 73 area, all the way up into the 200s. Later, fail. Oh no, this one doesn't fail. This is a little winner, and this is another winner. So you could see, different markets, same settings, risk or reward. Think about your risk reward. Have tight stops, position yourself. And when I say position yourself, you get into the trade, and if it's not working out, you get out faster. That's it. Simple. That's why we're able to draw these zones, so you know where you should be getting out at. Okay. Again, it's not rocket science. It's not rocket science, but you got to understand some of the science of trading, right? Know when a trade is not working out and get out. Simple. I mean, I can't stress that enough. I mean, and that's something that everybody talks about, but very few people do. They say, give it a little more time to come around and work out. But more often than not, it just doesn't work out. So get out when the trade's going wrong and let your winners ride. I mean, shit, man. So you just, you got this trade here, again, from 175 all the way up to 200, starts turning down. Okay, so you get out at 195. Fine. That's 20 ticks right there. You have these trades here. You get long here at 180. It's not working out. It comes back down to, I don't know what that is. Come on. So say you're getting long here. I don't know. Okay, we'll say 181. Okay. Your stop is just down here at, call it 75. So it's a 6-tick stop. Okay. Are you willing to risk 6 ticks to get, from 73 up to, I don't know, 200? That's 25 ticks right there. Are you willing to risk the 6 ticks? Risks, you're getting long here, call it 70s, I don't know, we'll just say 78. Okay, 78, you got your stop 6 ticks away. It's 72. Are you willing to risk the 6 ticks there? You get a move up to 82. So It's not the greatest trade, but you got something out of it. Again, are you willing to, get short at 80 with a stop up here at 85? You're risking 5 ticks, and what do you get out of this trade from 80, down into, 65? That's 15 ticks. You risked 5 ticks for 15 ticks. That's what you want as a trader. You want good risk-reward ratios. Okay, so thanks for watching this video. To learn more about the Delta Scalper and order flow, go to orderflows.com or visit deltascalper.com. Thanks, and have a good weekend, everyone. Bye-bye.